Hello there. In order to curb inflation, the British and Swiss central banks are each raising their key interest rates by half a percentage point. The rate hike in Great Britain was not without controversy, though. In addition to the ECB, the British and the Swiss central banks further tightened the reins on monetary policy on Thursday. As expected, the Bank of England, the BOE, raised interest rates by a half a percentage point to 3.5%. However, the move was not without controversy in the MPC Monetary Policy Committee. The decision was made by a vote of 6 to 3. Two MPC members, including economist Silvia Tenrero, did not want to raise interest rates, while one advocated a larger increase. According to the majority of monetary politicians, further rate hikes are necessary in order to curb the current double-digit inflation rate. The market expects interest rates to rise to 4.5% by mid-2024. In November, the inflation rate on the island fell slightly from a good 11% to 10.7%, so it went down 0.4%. The British Central Bank has again raised its key interest rate in order to counteract this high inflation, and bank economists had expected this decision. It is the ninth rate hike since the end of last year, when the base rate was just above zero. The day before, the US Federal Reserve had already raised its key interest rate by half a percentage point as well. The Bank of England had to act, as the sharp rise in the cost of living had led to several strikes in recent weeks. The central bank fears that the UK could face a prolonged recession. In the 3-month period from August to October, economic output fell by 0.3%, and inflation was 10.7% in November, slowing somewhat from the 11.1% in October, and that was the highest level since 1981. The increase will make it more expensive to borrow in the future, so less money should come into circulation. However, this also means that companies have fewer financial resources to make investments, which could further shrink the economy. Monetary policy doves used this first sign of an easing of the situation to advise against further rate hikes. Ebury's Matthew Ryan called the split vote dovish and the Bank of England's message unclear. Higher base rates mean rising mortgage rates affecting millions of households in the UK. It's another painful squeeze for already burdened doctors, said Sarah Coles of research firm Hargreaves Lansdowne. Kitty Usher, chief economist at the Institute of Directors, hoped the recession needed to fight inflation would be as short as possible. While the Bank of England even expects an almost 2-year, albeit mild recession, other economists expect the recession to end as early at the end of 2023. According to forecasts by the BOE, the inflation rate should fall sharply from mid-2023 and even fall slightly below the target mark of 2% in 24 and 25. The Swiss National Bank has increased the key interest rate by half a percentage point to 1%. In this way, we are counteracting the increased inflationary pressure and a further spread of inflation, said the SNB President Thomas Jordan at a press conference. However, the end of the road has probably not yet been reached. It cannot be ruled out that additional interest rate hikes will be necessary to ensure price stability in the medium term, said Jordan. In Switzerland, the inflation rate of 3% is significantly lower than in the Eurozone and the United States, and especially Britain. However, inflation is still well above the range of 0 to 2%, which the SNB equates with price stability. The central bank forecasts inflation of 2.4% for the coming year and 1.84% for 2024. For the current year, they calculate with an average inflation of 2.9%. The end of negative interest rates in Switzerland, which began in June and ended in September, has had consequences for banknotes in circulation. They have fallen by 10% since June, after more than doubling to 91 billion francs in the previous 15 years. SNB Vice President Martin Schlegel attributed the strong increase to the fact that companies and private individuals had hoarded more cash in times of great uncertainty, such as the financial crisis and the corona pandemic, and as a result of negative interest rates. 1,200 notes were particularly in demand. After the interest rate hike in June, banknotes worth 10 billion francs were returned, including 1,000 notes worth 7.7 billion francs. Schlegel expects this decline to continue. But you see, inflation will be a topic we will talk about for still a long time before it's kind of back to normal. And I'll see you in my next video. I'll be back.